afternoon, everyone, and thanks for taking the time to join us today. Also, a very special thanks to the Beta MN team for such a great job organizing the very first virtual Twin Cities Startup Week. I'm lucky to be joined today by some amazing colleagues and venture capitalists based right here in the Twin Cities. And today we're really excited to have an open and honest discussion about something that is often top of mind and often really fear-inducing for founders and startups, and that's fundraising. I hope that you'll be able to walk away from this conversation with a better understanding about how the fundraising landscape has changed as a result of COVID-19, and also armed with some ideas around how to stand out and put yourself in a better position to succeed. And we absolutely welcome any and all questions during the live Q&A portion immediately following our discussion. Before jumping into things, I'd love to quickly introduce the rockstar panel that we have for today's discussion. Ryan Broshar is a founding partner of Matchstick Ventures, a VC fund that invests in early stage tech companies in rapidly growing yet underserved ecosystems. Ryan was formerly the managing director for the Techstars Retail Accelerator and is the founder of Beta MN and Twin Cities Startup Week. Rob Weber is a managing partner and co-founder of Great North Labs, an early stage venture fund focused on helping founders launch and scale companies in Minnesota and the upper Midwest. Rob has been a successful entrepreneur and operator since the age of 16 and is also a board member of Ministar. And Mary Grove is a managing partner of Bread and Butter Ventures, a venture firm investing globally while leveraging Minnesota's access to corporate connections, commercial opportunities, and industry expertise. She previously served as the founding director of Google for Startups and was an investment partner for Revolution's Rise of the Rest seed fund. She's also the co-founder and executive director of Silicon North Stars, a nonprofit to help young Minnesotans from underserved communities pursue careers in tech. And my name is Andrew Felbinger. I'm an investor with the Urban Innovation Fund. We're an SF-based seed fund providing capital and regulatory support to startups shaping the future of cities. And we've been fortunate enough to call the Twin Cities our second home for the last 2 years. Let's dive into it. Fundraising has historically been an incredible challenge for early stage startups, with fewer than 1% of startups able to successfully receive a venture capital investment. Mary, would love to start with you and understand how the fundraising landscape has changed over the last few months as a result of COVID-19. Have you seen any changes to your pipeline, the speed at which deals are getting done, valuations, follow-on funding, or anything else noteworthy?
Well, thanks, Andrew, for bringing us all together, and thank you everyone for tuning in. It's a very special year this year with a fully virtual program, which I think for us mirrors the experience perfectly of entrepreneurs who are raising capital during this time. 2020, what a year, what a last few months it's been. If I were to kind of trace the trends from the perspective that I've seen, immediately in March and April, we saw a little bit of analysis paralysis where some firms were open for business as usual, but on the extreme ends in both directions, you had some that were completely pulling back and saying, we're not writing a check for 18 months. So much so that some of the investment teams were leaving the firms, to some who are leaning in more forward than ever and trying to, change and shift the landscape of valuations. And so that was sort of the first couple months of, oh, wow. But I think things have really not just stabilized, but in fact accelerated as more investors are looking to deploy more capital. As the stock market is as it is, ventures is, I think, a very attractive asset class overall right now in general. So the trends that we're seeing, one is deal flow has been extremely high volume and extremely strong. And you also have unique situations where companies are preemptively raising ahead of schedule or opening up the previous round at the previous valuation to take a little bit more capital to extend that runway a little bit. I would say across the board, I've personally seen a haircut in valuation across both, consumer and enterprise businesses, with one exception. In talking with a lot of coastal funds, they're telling me the opposite's happening on the coast. Of these valuations are getting super inflated to the point where there's concern of a company's ability to grow into them. So I really think it is a mixed bag, but I would say for Bread and Butter specifically, it's been a very active time. We've closed 6 new investments in the past 2 months here, and just seeing really, really strong deal flow from all over the country and internationally as well. But the one thought I'd leave you with is that in previous times of economic recessions, and if you go back and look at 2008 and further back in history too, that breeds a tremendous opportunity for innovation and to be scrappy, and for investors to also get in a little bit more towards the bottom. And so you usually see a trend of unicorns created coming out of these crises. And so I am hopeful that now is actually a great time to raise capital.
Thanks, Mary. And given that there is so much activity going on right now, would love to kind of turn it over to both Ryan and Rob and get both of your perspectives on whether or not there are any qualities or attributes in a founder or startup that you're putting more emphasis and weight on now than you did previously before COVID-19.
Sure. Yeah, thanks, Andrew. Excited to be here, part of the virtual event. Yeah, so I think one of the things that we've always hit on at Matchstick is finding founders who are gritty, are resilient, have been tested before in life or with a startup, and have the ability to overcome obstacles from there. So I would say, like, if all else, we've seen those qualities come to the forefront of a lot of the companies that we're investing in, but also within the portfolio. And it's definitely one of the key characteristics that we have. I mean, there's never a great time for a pandemic or all the strife going on around the world is terrible. But what we've seen is, like, with our founders, is that the way that they've reacted to that, and the way that we've seen some of our potential investments react to that, is front and center, right? Like, it's very open to see, like, how they can overcome some of that. So that's actually been great for us, because it allows that testing to happen very early on in the relationship with the founder, and with the team that they've built around that. So, yeah, I would say, if all else, those qualities are first and foremost. They're being tested daily. It takes, every day it seems like there's a new thing for them to overcome, and it's something that I think is going to be needed for the foreseeable future as well. So
great. And Rob, do you have similar comments on any qualities that you're kind of looking for and emphasizing now?
I think the number one personal value that a founder needs to be successful, regardless of the boom or bust period they're in, is accountability. I look for founders that demonstrate accountability. They feel empowered to control their own destiny, but they're also, they're not blind to problems that may arise. They may have some adaptability and ability to respond, some resiliency, but ultimately, at the end of the day, they're not going to be the victim. They're going to take ownership of what they're building. And even more so, as a leader in a startup that's going to scale, that needs to translate beyond the founder and into the organization to create a culture centered around accountability. And to me, that's how you build a resiliency in an organization.
Thanks, Rob. And I mean, it sounds like from both of you that importance of resiliency is something I hear a lot. Accountability is something you both kind of spoke to. Having that kind of founder that you can really trust to get through this pandemic, I think, is really an important quality, it sounds like. And I guess, Mary, on the flip side of this, are there any immediate red flags that are effectively almost an instant deal killer that you might hear from someone when they're pitching? That's something that comes up.
Things on my list actually map nicely to the previous answer, right? I mean, the first is around the paramount thing we look for, especially investing at the early stage, is really team. And so any flags around team, culture, leadership, I guess my advice to founders would be, if there's been tension or challenges with the management team, it's best to be transparent with your potential investors about that and share these issues up front so that we can work through them. But we love to spend more time, not just with the founding team, but others in the team, to get a sense for that. So it will come up, it will come out. So I think being transparent, but that people element is really important. The other big thing, ties to Rob's point around accountability, which is to know your numbers and the data inside and out, and arm yourself with that as powerful knowledge. We've been in some scenarios where it's just a super exciting business. The traction is great, but if the team isn't there on their numbers, and it sort of begs the question about how will this scale effectively without being able to mobilize that data to your advantage. So those are a couple of things. One thing I'd say is not a deal breaker, but point about thinking of your position in the market and the competitive landscape. Whenever, you know, the question comes up, if we don't have competitors, or, you know, it sort of raises an eyebrow of, well, you know, we're going to do our homework too. And it's best to articulate the full picture and your unique differentiation within that, rather than saying like, this is so unique, nobody else is even thinking about it. So those are a few of the key themes.
Great. And just switching gears slightly, obviously we're all, you know, using Zoom and virtual video collaboration software right now and for, you know, all of Twin Cities Startup Week. And obviously all of these kind of softwares have been just complete game changers for fundraising over the last 6 months. And so would love to ask, you know, Ryan, kind of how has Zoom and video conferencing software changed your interaction and diligence process with founders?
Yeah, it's been interesting, right? Like, we're a distributed fund to begin with, so my partner is in Boulder, Colorado, Natty, Zola, and so we're constantly on the Zoom, so we're kind of ready for this. But now it's like our life is on the Zoom, and that's with new funders, new companies, you know, mentors, any of that stuff is, and that's life. So we've kind of come to this conclusion of the best interactions for getting to know startups, and we're just getting into some startups right now that we're investing in that we've never met in person. And for us, like the personal relationships with our founders and just kind of authentic connections is paramount to us making an investment. But you know, here we are in COVID, and that's not happening. So what we found is a great tool for us is, instead of having like these, you know, kind of multi-hour Zoom calls where by the end of it everyone's eyes are glazed over and you know, everyone's checking their email anyways, like what we've done is actually set up a series of smaller interactions, where it's like, you know, 15-20 minute, just like topical, like what are, you know, product demo, financial model, how are you and your family doing, like just check-ins that are kind of smaller and continual. And they don't have to be totally scheduled either, right? Like I think it's really important to have some impromptu connections as well, just like you would if you were bumping into somebody, you know, at WeWork downtown or something, which is, you know, not having as much, or going out for dinner, or going, you know, having all these like kind of personal interactions. It's hard to do that in the virtual setting and not have it feel too robotic, you know? Mm-hmm. So for us, we've tried to do kind of a more interactions, but shorter, and topical as well, like kind of let's get through this. And that's been really helpful for us. I mean, I think the more you kind of have those interactions, the more you can build trust virtually. You can build, you know, an actual authentic connection with someone while not wasting their time and you know, having people go brain dead on Zoom, which I know a lot of people can do that, and hopefully not during Twin Cities Startup Week, because all the content's amazing. But I think we all know that feeling.
Yeah, no, Ryan, I completely agree. And I think I'm glad you mentioned that, you know, you're already a distributed fund. I think that resonates very well with, you know, with our fund being SF based and having kind of HQ2 in Minneapolis. So it's nice being prepared from our end, but obviously it's a whole different animal for founders. So I think you kind of outlined really how it's changed quite dramatically. And given that, you know, Mary, are there any things that founders can do to really take advantage of this opportunity now that so much of fundraising has gone virtual?
Yes, I mean, I think it's a powerful opportunity to use that to your advantage, right? This is somewhat democratized access a lot more, and it's that. So I would encourage founders to try to broaden, when you're doing your research on potential funds, broaden the list even further than you may have already had it, to target funds and geographies that maybe you thought you didn't have access to prior. And I think people have a willingness now, even firms who aren't actively writing checks, or if you're 6 months out from thinking about a fundraise still, you can use that time to build relationships through Zoom, because, you know, the opportunity cost is low, there's no commute, there's no flight involved. So think about widening that search is thought number one. Second is, you know, you got to really proactively put yourself out there. And that means doing your research too. And of course you can approach them directly, but take a look and research the portfolio companies they've invested in, others on the team, who are some of their advisors. Do you have any ways of getting in front of that firm and during this time in particular? And then the last piece of advice is just to continue to think about, we all have some screen fatigue going on and the multitasking, and it's so tempting, but the more that you can be super prepared and super committed to being intentionally in the moment and then following up, effectively as if you had been in person. That's really powerful. We all can see when, people are getting a little bit distracted, but it's just really taking advantage as much as possible and doing that strong follow-up afterwards.
Great. And Rob, obviously both Mary and Ryan kind of alluded to that importance of building a relationship. They kept talking about, how do you build that relationship? That's kind of the constant goal of that founder VC, building a marriage kind of before an investment. How can entrepreneurs establish a strong rapport in a time where social distancing and Zoom meetings have replaced getting together for coffee, traveling to meet the team, et cetera?
I think a startup selling its equity is not that different than selling its product, right? You have to, very rarely are you going to have let's say use outbound sales, a single call close. You have to invest in the relationship and improving the customer's understanding of what it is you're selling. And so I think you should take that approach when you're selling your equity. I think if there's a famous post from Mark Suster, lines, not dots. I think that's true in the COVID world, post-COVID world, and it was true before COVID. The ways you can do that are by, providing updates on your progress and momentum. I think the thing that I think is being a little overly coached in the startup world these days is the importance of storytelling. And I think Mary alluded to knowing your numbers and the math behind your startup. I would love to see that more prominently on display. And also that updated over time. So many of the pitches that I hear are they emphasize the story so much so that you never really hear the math behind the business and what's driving, what's the average customer value? What's the go-to-market strategy? What's the scalability? And then another one is just TAM, the total addressable market. The vast majority of the time, I leave hearing, startups are talking about their TAM, but in estimation, they're quite off in how they're actually thinking about it. And I think just being more realistic, I guess in that regard, I'd focus more on service obtainable market, or SOM. Connect your ability, whatever your primary customer acquisition method is, to your total addressable market. That's what I care about the most. It's the part of the market you're going to access. And I rarely do I see a founding team that actually can connect their distribution to the service obtainable market. It almost never comes out of a pitch. But these are, I think, just in general, look at it as a line and not dots. Don't expect you're going to do one pitch and you're just going to close. I think that's also, if you're in some virtual pitch meeting and you're speed dating a bunch of VCs, don't expect you're going to close off that meeting. Use that as the conversation starter and then keep the conversation going.
Yeah, absolutely, Rob. That's just another way, that kind of resilience of repetition, following up, building that over time, going back to those qualities that you look for, I think tie in really nicely. And I want to go back. Ryan, you obviously mentioned, as we already alluded, having a presence both in Minneapolis and Denver, and already having that kind of remote structure within Matchstick yourself. And NFX did a sentiment survey across the VC and startup community and found that nearly a third of every early stage startup intends to operate on a fully remote basis moving forward, which is obviously a stark difference from kind of pre-COVID, how people were thinking with, Silicon Valley and other tech hubs and really kind of building an HQ in one area. Ryan, would love to know kind of how that could potentially have an impact on an investment decision. Is that something that you consider? Are you looking for teams to have that kind of traditional HQ? Could remote potentially be more attractive because of their cost savings? Would love to hear your take.
Yeah, happy to chime in here. I think we're huge fans of remote teams. We've made many investments, especially in Fund 2, into companies that some that are fully remote, everyone's in a different spot, or some where most are remote, maybe a handful in one location, just because that's happened to be where they had started the company. And I just think what it does is, I think startups don't need to be built on the coast, right? They can be built in our markets, but also spread out. Go to where the talent is, because all the talent is really the core of the success of the companies. And I mean, we even look to the extent of clearly you can have remote teams across the United States, but we're seeing more and more companies go remote internationally, and continuing to find more and more talent that is, affordable. The dollar goes a lot further, but the quality doesn't go down. And so you think about kind of the access for the companies to begin a business and having that become more mainstream. I think we're just seeing the tip of the spear when it comes to this. I think it'll someday be more normal to not have like a centralized HQ than it will to have, everybody kind of spread out. And, as work from home becomes more and more normal and people will get used to it, I fully think it's going to become more and more distributed. So it's something that I think for a while when people would say it, they could kind of like, yeah, and we've got a couple of people, in this other area. And it was always kind of like this, like, hey, I hope you don't mind. But now it's like, okay, well, that's totally fine. Just you tell me why, like, is there just kind of justify like where it is and who it is and et cetera. And I think the main thing is you're seeing these companies being built today who are built fully remote, and they're not converting to fully remote. And I think that's a big difference as well. Is when you're fully remote from the start, it's a massive advantage versus trying to convert, which a lot of people have been forced to. I think some people have done it well, some clearly haven't. But I think it's going to be a massive trend in the future, and something that at Matchstick we're really excited about.
I think it's a super exciting trend. And I mean, I think everyone's a little eager to see where the first fully remote from the beginning unicorn comes from. But I can only hope that it's going to come from somewhere in the central US. But I think it's also interesting looking at how, you talk about having that advantage of, being that kind of fully remote from the beginning. But then you look at companies like Square and Twitter who are now giving the option for all of their employees work remote permanently. So I think the trend is definitely very unique. And it's interesting how you kind of alluded to the advantage of being able to find and like access the best talent and go in there. That's obviously a huge advantage. And that also tends to translate into cost advantages. And so given all the uncertainty around fundraising in 2021 and what that landscape will look like, Mary, would love to have your thoughts on how you're advising your portfolio companies, as well as what you're looking for in entrepreneurs to, how much to raise in terms of how much runway they should be, kind of shooting for, given the uncertainty around fundraising and kind of reasonable expectations around how the landscape has evolved.
Sure. And just one final thought on the last question. I'm also a huge fan of, remote distributed teams, and having worked at Google, which was such a special place culturally, but, in my last role, for example, our team was distributed in 17 time zones, and it was really effective. Like the clock never stopped on the work. It was just a virtual baton globally. And I think it's really, really powerful. I'm a big fan, but I also spending time in cities across the country like Tulsa and Birmingham, where you see, and they have these whole remote programs that are rolling out, incentivizing people to build satellite offices. It's just a really interesting trend to track. So I'm a big fan there as well. I think, with respect to your question on runway and how do you think about it in this era, I think the way you typically would just make sure that we have enough. So typically with any round, we would look to advise a company to target, 18 months runway plus or minus, depending on the type of business or where we think the metrics will be by then. But it is an opportunity, if you've recently raised and there's a lot of momentum, to think about maybe we take a bit more capital, maybe we increase the size around a little bit. It's best to be, I think, to save up for a rainy day there. So if you are thinking about fundraising, there's a variety of different instruments and vehicles. My sense from working with just conversations with dozens of firms, people are very open right now. So even if it's not immediately in your roadmap, it could be worth having a conversation, even an early conversation to lay the groundwork. But 18 months or so.
Great. Thanks. And, obviously it does sound exciting from all of you that, there's a lot of activity, there's a lot of excitement in the space right now. Would love to kind of just go down the line and hear if you had one parting thought and kind of one piece of advice for founders who are looking to raise right now or in the future. Would love to kind of share and hear what that one piece of advice would be. So Rob, would love to start with you.
I think if you need inspiration, look back at the last two recessions. I think Mary talked about all the unicorns. I'll cite some regional ones and some national ones if you need inspiration. regionally, we had Field Nation and Sport Engine were started in 2008, 2009. Groupon was started in the region in Chicago, and I think the same period. All of these were multi-$100 million to $1 billion plus outcomes. I happen to be on the angel round of Field Nation, so a huge fan of that one. But nationally, they were great, so many big examples. In fact, I did a little research on this. You can check out our website, greatnorthlabs.com. I posted just from the last 3 sessions. I actually was struggling to find examples of breakout companies that were not started in these recessionary periods. I don't know why that is, but I guess on the national level, in the last recession, you had Uber, you had there was Slack, there was Instagram, Pinterest. It's unbelievable. The best time to start a company is often out of these recessionary periods. There's plenty of data and examples. And I think if you need inspiration, just look back at those. And this is really a good time. It's better to lock in your costs and your overhead during these softer periods than to start planning your business from the top of a bull market, right? So this is really a great time to be a founder.
Thanks, Rob. And Ryan, any kind of single piece of advice?
Yeah. Well, I think the thing that everyone should recognize that these are hard times, right? There's really hard decisions being made. Like when we work with our founders, they're, having to make really tough decisions on staff and on the business operations and pivoting. Like it is a thing that is happening, I think, to call it out. So you're not alone. Like it's very common across the entire country. But I've seen the stuff that has resonated and I think has led companies through this are founders who over communicate on stuff, and they're just incredibly good at telling what needs to happen, how it needs to happen, when it needs to get done by, and keeping everyone looped in of the good, the bad, and the ugly of what's happening at all times. And that includes employees, clearly it includes investors, it includes family members, it includes the whole stack of people who are just over communicating where it is. And it's hard to do that virtually, but I think by over communicating, I think we can all agree it's hard times and there's a lot to overcome here. But if you're constantly communicating that and letting people know, like, hey, this is where we are, this is, here are the hard things we have to overcome, and then celebrating those little victories along the way, I think that's come a long ways I think the strongest founders we have in our portfolio seem to just really nail that right now.
Great. And Mary?
I guess if I had to say one word to focus on, it would be differentiation and just being overly prepared to communicate in every vector how you differentiate on the team front, on the business front, on the market front, on your approach, being able to articulate what makes you and your company super special. And on the flip side too, if you're an entrepreneur and you're researching or meeting with VCs and deciding who to take capital from, ask them as well, right? What differentiates you from every other seed fund out there? Or what differentiates you as a great investor to work with? And just really make sure that there's an alignment between those two differentiating factors and that they overlap well.
Well, I would like to thank all 3 of you, Ryan, Rob, Mary. I know I've certainly enjoyed the engaging conversation we've had, and it sounds like from all of your comments that it really is an active and exciting time to be out raising and be out starting a company. And I think that's especially true in kind of the broader central US. So I think it's an incredibly exciting time for all of our various funds that I look forward to kind of continuing to collaborate with you guys in the coming years. And I want to thank everyone who joined us to listen throughout the conversation. I very much invite you all to come with any and all questions as we open up the live Q&A, and enjoy the rest of Twin Cities Startup Week. Thanks, everybody.
Thank you.
Thanks so much. Take care.
Thanks, Andrew. Thanks, everyone.